Hello everyone, it is Friday, April 4, and today we'll take a closer look at the euro and the British pound charts to assess potential market shifts. The euro posted a remarkable rally on Thursday, surging by an extraordinary 300 pips in a single day, marking a move not seen in decades. The British pound also recorded sharp gains as both currencies benefited from mounting pressure on the US dollar. The rally was largely driven by renewed concerns over US President Donald Trump's tariff policy, with markets anticipating that the latest trade restrictions could inflict demand on the American economy. Downward revisions to US growth forecast further waned on the greenback. Adding fuel to the euro's bullish run was upbeat data from the euro area. Notably, a stronger-than-expected services PMI helped lift the composite PMI, reinforcing optimism about the region's economic outlook. In contrast, US economic data painting a more worrying picture. The ISM services PMI fell to 50.8 in March from 53.5 in February, indicating a notable loss of momentum and raising concerns that the US economy may struggle to withstand the added strain from Trump's tariff strategy. Today's macroeconomic calendar features factory orders data from Germany as well as construction activity and retail sales figures from Italy. In the UK, the focus will be on the construction PMI. However, unless these reports come in significantly above expectations, they are unlikely to provide meaningful support for the euro. Our eyes today will be on the US non-farm payrolls report, which is expected to show an increase of 137,000 jobs in March, following a gain of 151,000 in February. A stronger-than-expected reading could help the dollar regain some ground. Conversely, a disappointing print may prompt further selling of the greenback, offering additional upside for the euro and the British pound. Also on the agenda is a speech by Federal Reserve Chairman Jerome Powell. While he is not expected to deliver a direct critique of President Trump's trade policy, he will likely emphasize the need to strike a balance between sustaining economic growth and containing inflation. That said, inflation dynamics remain uncertain, especially as markets weigh the impact of newly imposed tariffs. In this context, the Fed may lean towards a wait-and-see stance. Such an approach could help stabilize the dollar, at least partially, especially as the central bank is unlikely to signal imminent rate cuts. Let's now turn to the technical outlook. The 1-hour EUR USD chart suggests that the levels of 10.97 and 1.1143 could serve as potential entry points for short positions. However, caution is advised when considering selling at these levels. False breakouts around these marks would offer opportunities to sell the pair, targeting a corrective move towards 1.1039 and 1.0994. If US data come in stronger than expected, the euro may extend its decline to 1.0946. At this level, I would recommend going long on a rebound, aiming for a 35-40 pip upside move. Long positions at 1.1039 and 0994 can be considered on the false breakout. Alternatively, if the euro breaks through and consolidates above 1143, the bullish trend could continue towards 1179 and possibly further to 1.1213. At this level, short positions on rebound would make sense, targeting a 30-35 pip intraday correction. Going short at 1143 and 1179 would only be relevant in the event of a false breakout. Speaking of the British pound, the currency failed to consolidate above the 1.3200 level but pulled back. A false breakout at 30.80 and 30.27 would trigger a buy signal, pushing the pound-dollar pair up to 1.3128. If the price breaks through this level and consolidates above it, sterling could extend gains to 1.3171, potentially reaching 32.04. At these levels, short positions on the rebound may be considered, targeting a 25-30 pip correction. Going short at 31.28 and 31.71 should be considered under false breakout. However, the broader trend remains bullish, so you should be careful when considering short positions. Alternatively, if the price breaks below 30.80, the British pound could dip to 30.27, probably extending its weakness to 1.2976. At this mark, I would recommend going long on a rebound in anticipation of 25-30 pip move. Long positions at 1.3027 and 1.3080 should only be considered following a false breakout. Good luck to all and enjoy the weekend.